Welcome to today's episode on the smart money concepts trading model. Okay, this is the fourth episode, and if this is your first time of coming across this channel, please do well to subscribe, turn on the notification bell to get notified when we upload our weekly content. Okay, so now in this episode we are going to talk about time frame selection and defining setups for your model. Okay, so now real quick before we get down to today's business, the disclaimer you can see on the screen is that all concepts talked about in these teachings were found by the inner circle trader, and all credit goes to him. Okay, so I'm not taking credit for this, and I'm actually making this series not as a substitution to the 2022 um, mentorship. Okay, this is more like if you are able to blend the two concepts together, they are not much of a difference. Okay, they are not much of a difference. Okay, so if you can blend the concepts together, it will be great. But if you feel that you want to, you know, actually put effort on this particular trading model, um, there's no harm in trying. Okay, there's no harm in trying. All concepts work. Okay, all concepts work, just that they are different. They differs a little bit. Okay, it differs a little bit. So now we're going to be talking about time frame selection and defining setups for your model. Okay, so now time frame selection and defining setups for your model. When we talk about the concept of time frame selection as a trader, this is one of the basic starting points in trading. Okay, if you are going to be a trader, if you are going to be a successful trader, you have to, you know, determine the time frame, and this comes as a way of knowing the type of trader you are going to be. Okay, and the type of trader you are going to be, it cannot be determined by your mentor, neither can it be determined by anyone but yourself. Okay, in other words, your type of trader that you have that you are going to be is going to be directly on your personality. Okay, it's going to be based on your personality and the type of person you are. Okay, in the sense that, oh, what I mean is that there are there are individuals that tend to make decisions real quick. Okay, they tend to change their minds a lot, and they are, you know, they are kind of individuals that are very patient. And so what I'm actually trying to say is that our personality differs. Okay, so same thing can be said for choosing the type of trader you want to be. Okay, so your personality is actually going to determine that for you. Okay, yeah, we can't actually teach you the kind of trader you should be. Okay, so when it comes to the time frame selection, monthly charts, this is the chart for position trading. Okay, this is actually the go-to chart for position traders. Okay, position traders use the monthly charts as their high time frame, highest time frame. They use it for framing their setups. Okay, they use it as their higher time frame. Okay, so now the next time frame is the weekly charts. Okay, the weekly charts, this is used for swing trading. This is used by swing traders. Okay, so we have the daily charts. This is used by short-term traders, and the 4 hour or less for day trading. Okay, now before, what I'm actually going to cover in this uh, series, in this particular video, is the way we trade before the 2022 mentorship. Okay, the 2022 mentorship actually gave way for the intraday trading. Okay, that was actually, I'm sure that was what bet the intraday day trading. Okay, so before now we were only like, we were more interested in, I used to be a short-term trader. Okay, I was more interested in this short-term trading. And day trading. Okay, so but the 2022 mentorship actually introduced the intraday day trading. Okay, so these are the type frames. Okay, As a trader, we have what we call top-down analysis. I don't know, most of us might be familiar with the concept. Okay, the top-down analysis is the process of doing your analysis from the highest time frame. You choose a particular time frame as your highest time as your higher time frame. Okay, where you frame your setup around. Okay, and you come down, you drop down to two time frames lower for your entry. In other words, if you are as a position trader, the monthly time frame is going to be your highest time frame. Okay, where you frame your setups around. Then the weekly time frame is probably going to be for confirmation of trend or bias. Then the daily time frame is going to be for execution. Okay, so that is for position traders. Then the weekly charts, which is for swing traders, the weekly chart is going to be the highest time frame, the higher time frame level. Okay, where they frame their institutional swing points, point of interest, and the rest. Okay, then the daily time frame is going to be used for confirmation, and the 4 hour is going to be used for entry. Okay, so now the daily charts is for short-term traders. Okay, they use this as their highest time frame level. They frame their setup around the daily time frame. Okay, as their highest time frame. Okay, that's the highest they go in terms of time frame. Okay, they use the 4 hours for confirmation and the 1 hour for entry. That's for short-term trading. Okay, so now for day trading, they use the 4 hour or less. It could be the 4 hour or 1 hour. Okay, then they use the 30 minutes for confirmation and 15 minutes for entry. That is for day trading. Okay, so but with the 2022 mentorship, I think most traders attentions were they're actually directed to the intraday. People actually came to fall in love with the intraday day trading. Okay, I for one, I actually love intraday day trading. Okay, so but I'm thinking of going old school. I'm thinking of blending the concepts together. Okay, I'm thinking of blending the concept together because before now we aren't actually looking at midnight opening, New York opening, and all those stuff. Okay, so um, but that's just the idea, guys. That's just the idea. I'm going to try and blend those two concepts together and look at how it's going to work out. Okay, so now defining setups for your model. Okay, defining setups for your model. Now we'll look at the setups, our setups for our model. Okay, as a trend trader, okay, we have trend traders, those that are only going to be trading only in the direction of the monthly and weekly chart direction. Okay, that is for trend traders. Then we have swing traders. Okay, these traders, they are going to be trading the daily chart, intermediate, term, price action. Okay, so then we have the contrarian trader. These traders are mostly focused on trading reversal patterns at market extremes. Okay, so these traders, they make their analysis and they trade reversal patterns, that is run on liquidity for the market to turn around, then maybe a failure swing. They anticipate these patterns and they like to trade reversal patterns. Okay, while the short term traders, they trade the weekly ranges for a duration of 1 to 5 days. Okay, then the day trader, which are the intraday swing trading, they exit by 2 p.m. New York time. Okay, so you can see that the concept before the 2022 before the 2022 mentorship are a little bit different, and I think there some advancement has really been made. Okay, ICT has really made some advancement to it. Okay, so now let's go down further. The monthly chart. Okay, the monthly chart. This particular chart, before I get down to a little note I have here, this particular chart is probably being overlooked by many traders. Okay, you might actually be thinking right now that, okay, when we talk like we mentioned earlier, the monthly charts are only for position traders. That is where you're actually wrong. Okay, the monthly charts can really be, you know can really be amazing, can really be a kind of, and I'm really planning on, I'm eyeballing the monthly chart right now, okay, and I made mention of it in one of our previous videos on the dollar index price action based off the monthly chart, okay. And if my analysis is right, on the monthly chart we should see a kind of long-term bullishness in dollar, okay. So and I believe price, although I'm not going to force price, I'm just looking at it and I analyzed it from the monthly time frame, and I'm going to share with us why the monthly time frame is very important, and it can offer explosive moves if you as a trader know how to anticipate it, okay, how to anticipate it. Now the long-term price actions reference for the largest price action swings in trading, which is the monthly chart, okay. Trading setups on the monthly chart takes a great of time to form on this time frame, but when they unfold, they tend to unfold over many months, okay. I want you to take a note of this, underline this word right here, okay. They tend to unfold over many months, okay. In other words, if you are able to get a single setup from the monthly time frame, is that one setup is going to take number of months to unfold, okay. So therefore, thereby offering you a long, maybe probably a short range of time to trade in a certain direction, okay. And I'm going to get to that any moment from now. Now, due to the length of this chart of this time due to the length of time this chart requires to present a setup, trading in the direction of the most recent setup can yield low risk and high reward conditions. Swings can be several hundreds of pips over a long period of time, okay. So this is actually insane, guys. A single setup, you know a single setup got right from the monthly time frame can really yield a low risk and high reward conditions. At the same time, it can, provide it can uh, offer swings, can offer several hundreds of pips, okay, over a long time period. Now obviously this is a price action, okay. So now I want you to, let's say you pull up your chart right now, and this is the price action you are seeing, okay. So looking at this price action data, what is in your mind right now, okay? What is your bias right now, okay? I want you to pause the video and take a look at this price action, okay. So what is your directional bias? Now I'm going to answer that for us. Obviously we had a minor consolidation right here, okay. Then we had the expansion, okay. We had the consolidation, and we have the expansion, okay. Now if you remember the interbank price delivery, how the algorithm works, we start from all movements start from some level of consolidation, right? Then when we have the consolidation, what is the next stage? It goes into expansion, okay. So now when we have expansions, it goes into reversal or retracement. It goes into retracement or reversal, either of both, okay. But it always moves from some level of consolidation to expansion, okay. So in this case we have consolidation and expansion, okay. So definitely we should be anticipating some level of retracement, okay. So now going down further, now how does the market proves to us that it's about to retrace? Okay, that is when the swing high and swing low comes in, okay. When a market signifies to us that it is about to the moment it gives us information that it's about to restart retracement is when the swing low or swing high pattern has been created successfully. In this case we have these candles high, a high, we have a low and a higher high, a candle that has a high to the right side of it, okay. So this is basically a swing. So the market is signifying that retracement, that we are about to go into the retracement phase, okay. Now that will bring us, once we are in the retracement stage, okay, that will bring us to the use. Since we are bearish, we are going to be looking to sell. Probably where are we looking to sell right now, okay? Where will be our point of interest, okay? Now obviously I've already highlighted it, which is what I should not have done, okay. I should have created a separate slide for it. Okay, so but now using the hindsight, of course, as I have alerted it, you can see taking our fib from the high to the low. So where do we look to sell? Okay, we look to sell in premium sector. Now I want us to combine different concepts of smart money right now. Okay, let's say before during this time you were able to you are already familiarize yourself with the concept of fair value gap. Okay, so above the equilibrium level, what is resting above this is our premium level. Okay, this is a fair value gap, right? So this will be our first point of interest, and this will be our second point of interest. This is our bearish order block. Okay, so this is a bearish order block, and at the same time it had a fair value gap inside of it. Okay, why are we using this candle? Why not this? Because this is actually in the range of this candle. Okay, so when we have a situation like this and the smaller, and we have a candle that is inside the range of another, okay, we'll use the biggest one. Okay, so this is it. So this is our bearish order block, okay, drawn out in time. So now I want you to answer this question now. Prior to us getting uh to this fair value gap, okay, and probably reaching for the bearish order block, what is going to be your bias? What is going to be your directional bias? Remember, this is the monthly time frame, okay, and this is just a single month that has already been traded. This is 1 month that has already been traded. Okay, so and we don't know the exact number of months it's going to take before it gets to this fair value gap. So now, prior to price trading to this particular fair value gap, what is going to be your bias? Okay, so I'm going to help us to answer that, and I hope we are able to answer that. So your bias is going to be bullish prior to price getting to this fair value gap. Okay, so now obviously we can see price got up there and filled the fair value gap. Now, where is price likely going to trade to next? Where is price likely to going to trade to? Since we have already reached for some level of premium, where is price going to trade to next? Okay, obviously, as we can see, price started to retrace back uh, retraced back down into the discount sector. Okay, and it's going to seek for liquidity. So where is liquidity residing right now? Below this old low, right? And I talked about rejection block, which we are going to talk more deeply about as we proceed in this series. Okay, so this is a rejection block. Okay, so this is a rejection block. There's liquidity resting as the bodies of the candle. Okay, so at times it does not necessarily need to go below the wicks for stop hunt. Okay, it can literally trade just below the bodies of the candles, and we can get our exit out. So now, remember, this is our I want you to take a look at something. Prior to here, to get into this fair value gap, our bias was bullish. Then when we got here, we changed our bias, eventually changed, right? We changed from being bullish to bearish until price will get down to this particular levels right here, because as you can see, the bodies of the candle are relatively equal. Okay, so this is liquidity being engineered right here. Okay, so this is liquidity being engineered. So prior to this, for a whole month, I want to take a look at this. For a whole month, we were having a bearish bias. Okay, so let's say, and this alone, regardless of the type of trader you are, let's say you are a day trader, and you came up on this, and you saw this on the weekly time frame, you saw price reacting off the fair value gap. What can you do with this information? Okay, what can you do with this information? So what you will be able to do in this formation, or rather what you should do with this information, is that prior to price trading to the reaching for this old low, your bias is going to be bearish, regardless of the type of trader you are. If you are a day trader, until price gets to this particular level, you are going into every day looking for sales, looking for sales, looking for sales, looking for sales, looking for sales. Okay, until price gets down to this level, you are going, regardless of the type of trader you are, being a swing trader, because obviously in a monthly candle we have 4 weeks. Okay, in a monthly candle we have about 20 trading days, okay, excluding holidays and the rest. Okay, we have uh maybe not less than 20 30 days. Okay, so for the next 20 days before price gets down to this level, you are going to be having a bearish bias. Okay, so how amazing is that? Okay, how amazing is that? Just a single setup from the monthly time frame gives you a directional bias that lasted for on this single candle, on this single monthly candle right here, that lasted for about 20 days or so. Okay, excluding holidays. I hope you guys are getting the point of what I'm trying to say. Okay, although I'm going to come back to that. I'm going to come back to that. Okay, so let's just move forward. Okay, we have price reacting off this monthly fair value gap, right? So we expect it to reach for opposing liquidity, which is exactly what it does right here. It did right here. Okay, so now going down further, and remember we had 2 points of interest. Okay, we have this and we have this, so we are still watching. We have our first target already reached for, so probably we moved into sideline, then price began to retrace back up. Now remember, the liquidity that we are resting below this old low has already been tapped to. In other words, smart money has already accumulated the liquidity that were resting below this old low, okay, below the bodies of the candle, but we still have liquidities that are resting below the wicks. Okay, but right now the ones resting below the candles bodies have already been accumulated by smart money, and we are in discount. Okay, so what do we say smart money? Where do we say smart money are going to buy? They are going to buy in discount and sell here, sell in premium. Okay, so now I want you to pay your attention to, I want you to take your attention to this particular swing high right here. So what is resting above this old high? This is buy side liquidity, right? We are going to have those that went short here are going to trade their stop loss to this level, right? So now price began to started trading upwards. Okay, so now our point of interest right now is for price to reach for this bearish order block. Okay, so what is going to be our bias until price gets to this bearish order block? Bullish, right? So now I want you to take a look at the number of months we have until price got to this particular level. We had one, probably this was the count that reached for it. Maybe probably you did nothing in this week, in this particular month, but as you can see, price when price took cut this wood high and closed on this month, then came back and traded into this down candle as an order block. Okay, so let's say you did nothing here, but you saw the possibility of price reaching for this bearish order block and probably for this old high right here. Okay, so let's say you started hunting for your buyers here. Okay, now if you were able to anticipate this movement back, because this is still a retracement, this is another retracement right here. Okay, so we have this, we are still very much intact on our trading range from this high to this low. Okay, so these are all retracement, right? So we are still in the retracement phase because price failed to break structure lower. Okay, so we are still in our trading range and we are still in the retracement stage. Okay, so now prior to price getting to this bearish order block, where is going to be your bias? Bullish, right? So now let's look at the number of months we had before price got. Let's count the number of months. We probably have 1 2 3 4 5 6 7 8 9 months. Okay, we had 9 consecutive months before price traded to this level. Okay, in other words, you had 9 months of just looking looking for bearish bullish bias, just trading a single bias. Okay, I hope we are trying to follow the point. I hope we are getting the point of what I'm trying to say right now. Okay, the importance of the monthly time frame is so important, and it's so important in a way that if applied properly, can offer you explosive moves. Just imagine having just with a single setup, right? We were able to go bullish for a whole 9 months until we got to our bearish order block. Now price trades into our bearish order blocks. Where is the next level that price is going to reach for right now? because smart money is probably going to offload their long position right here and look for sell, because we are, as we can see, we are bearish. Okay, so this is just a retracement, right? So smart money is going to sell off, it's going to offload their long position here and look for new you're going to look for short position, you're going to sell to the buyers resting above here, right? So they are going to look for short position right now. So where is the market is going to trade to right now? Where is it going to trade to from this particular level right now? Okay, so I wanted to take a look at this price action. Probably pause this video and examine the price action before you think where is price probably going to reach for. We had already reached for the premium side, this premium spectrum, right? We are already in the premium environment, and price, as we said, move from one level of discount to premium and premium to discount. Okay, so if we are going into discount, where are we going to reach for? What's the next level price is going to reach for? Now, prior to when price reaches for the bearish order block, what would be your directional bias? Okay, that was the question we asked the other time, and obviously it's bullish, right? Now, what is resting below these old lows? Notice how the bodies of the candles are relatively equal. So this is liquidity. This is not just ordinary. Okay, this is not a kind of lock, or this is liquidity being engineered. Okay, this is, if you probably turn off the wicks of these candles right now, you will notice that this is a clean lows. And remember, we talked about our point of focus in the previous video, what to focus on as smart money traders, right? We talked about clean lows, relatively equal lows, old highs, and the rest. Okay, so this is an old low. Then at the same time, we have this low is way too clean, right? So the algorithm is going to reach for that particular lows to attack the liquidity that is resting, the sell side liquidity that is resting below these old lows, right? So now, prior to price reaching for this particular, before price reach for this particular sell side liquidity, what is going to be your bias? Okay, so I want you to answer that question before we proceed. What is going to be your bias until price moves from this level down to this level? What is going to be your bias? Okay, so obviously that is going to be bearish. Okay, so until we get here to this particular level right now, that is going to be bearish. Your bias is going to be bearish. Okay, so now this is the importance of the monthly time frame. Although it takes a lot of time to pan out, it doesn't matter the type of trader you are, it certainly points you in the right direction for a certain short period of time until price gets to your specific price level. Okay, this is what I've been trying to explain to us since. Then as a trader, if done right, you can use the monthly time frame to catch explosive moves in the market regardless of the type of trader you are. Okay, so now I want to take a look at this. This is 1 2 3 4 5 6. Okay, this is 6 months of trading in one specific direction from just one setup. Notice it only took one setup to point you in this direction. It only took one setup to, just a single setup to point you in this direction, and this is more than 2000 pips, guys. This is not a 100 200 500 pips kind of, this is more than 2000 to 3000 pips from this high to this low right here. This is more than 2000 to 3000 pips, if I'm not mistaken. Okay, so that is how important the monthly time frame is. It is not just limited to position traders alone. As a day trader, as a intraday trader, if you are able to to use it right, if you can analyze your setup right on the monthly time frame, if you are able to get your setup right on the monthly time frame, it tends to offer you these kinds of explosive moves. Okay, so now that is the importance of the monthly time frame. That is how important the monthly time frame is. Although it is slow, it takes a lot of times to to come into ferociously. Although it takes a lot of times to pan out, to play out, to form a single setup. Okay, a single setup from it can actually be a huge move. It can actually be a huge move. Now let's look at this swing in the weekly chart. Okay, so now we are moving from the position traders to the swing traders. Okay, as a swing trader, what can you do with this? Now I'm breaking it down. I'm breaking this single move down on how we can apply it to our different style of trading. Okay, ranging from the weekly, being a weekly trader, being a swing trader, sorry, a short-term trader, a day trader. How do you apply this? How do you apply this knowledge to your weekly time, to your monthly time frame? Sorry, to your style of trading. Okay, so now the intermediate time price action refers for the intermediate price action swings in trading. Trading setups take some time to form in this time frame. Okay, but when they unfold, they tend to unfold over many weeks. Okay, due to the length of time this chart requires to present a setup. Trading in the direction of the most recent setup can yield low risk and high reward conditions. Okay, swings can be several hundreds of pips over a intermediate term time period. Okay, so now this is that. Let's say you are just pulling up your chart uh for the first time. Okay, and you pull up the monthly chart. Okay, and you saw this. Let's say this is the particular week you are right now. Okay, and you saw this whole move, you saw all this move already happened. Okay, so now you saw this move and you saw we are currently in this month. Okay, and the month is just traded into the bearish order block. Okay, so now how do you anticipate this in your trading as a swing trader? Okay, so now what the monthly time frame also help you to do is that it helps you to define the range. Okay, it helps you to define your trading range. In other words, it helps you to define the range it helps to define the range as regarding to the level that price is going to be reaching for. Okay, in this case this we have this as our range. Okay, we are anticipating price to reach for the sell side liquidity resting below these old lows, right? So this is our range. Now our price has just traded into our bearish order block. Now going down to our highest time frame, probably we'll mark out the monthly bearish order block right here. Okay, so and we'll be on our weekly time frame watching and to see a shift in market structure, right? We'll be watching our time frame to see a shift in market structure and probably position ourselves as a swing trader, because as a swing trader the weekly time frame is our highest time frame. Okay, now probably this will be the number of time we will have a setup as a swing trader from this. Okay, looking at our range. Okay, so we are anticipating price to reach for this range. Okay, so until price gets down to this lows to sweep out this liquidity, our bias is going to be bearish. Okay, so the monthly time frame has helped to define our range, therefore we'll be expecting the weekly time frame to keep expanding lower as it should be. Okay, so now this will obviously be our shift in market structure, right? We have price consolidating a bit. So look at every time the price wants to make an explosive moves, look at how it consolidates. Okay, that's to tell you that the algorithm that deliver price cannot work without consolidation. Okay, everything revolves around consolidation. Like we said in our first episode, it has to start from consolidation, from some level of consolidation. Okay, so we have price consolidating right here, then breaks down. Okay, this is our shift in structure. Now here what will be our entry? Okay, as a swing trader, obviously you can see we had to wait for several weeks prior to when this is when price reached for the uh bearish order block, right? Then we add our shift in structure, probably 1 2 3, about 3 weeks after price had already reached for the bearish order block. Okay, so now you can see the time period that the different type of traders have to wait for just a single time frame to pan out. Okay, for a position trader, actually it took a whole month for this. Okay, no, for a position trader it actually took this. Okay, we have to get in right there. Okay, when price traded, you have to go down to the weekly and look for our shift in structure on the monthly time frame. Okay, that will be a top-down analysis, and that's kind of a concept for another time. Okay, so that's not going to be covered in this particular lesson, in this video I mean, but it's going to be among the series top-down analysis on the different type of trader. Doesn't matter if you are a position trader, swing trader, or the rest. I'm going to do all types of, I'm going to talk about the types of traders and their time frames, doing top down analysis on all. Okay, so now this will be your entry as a weekly, as a bearish as a swing trader. Okay, so just using a single time frame. In other words, we are not going down to lower time frame, we're just going to focus on one time frame. Okay, so obviously for a position trader, this will be your entry. Your stop loss will be above these old highs and your target will be below this old low. Okay, so that is how long position traders can hold their positions. Okay, you have to hold a certain position, a single position for 1, 2, 3, 4, 5, 6 months. Okay, they have to hold a single position for 6 months. Okay, so these are not just guys that have $10,000 in their accounts. We are talking about hedge fund managers. We're talking about smart money, those that have big accounts, okay, that has huge accounts, right? So they control huge funds. Okay, so as a swing trader using a single time frame in this example, this will be your shift in market structure, right? So now you have to wait for a kind of to check if we have. So let's say for completeness sake, you already know, you already had the idea of fair value gap and other blocks. Okay, so we are only going to be focusing on fair value gap and other blocks and breaker block. Okay, so let's say you know these three concepts of smart money, or these three tools rather. Okay, so now your first entry will probably be on this. Okay, so what is this? This is a breaker block. Okay, this is the last down candle before price takes out liquidity, buy side liquidity that was resting above this old high. Okay, so this is referred to as a breaker block. So when price trades back into this breaker block, this will be your entry, and probably at the same time trades into a fair value gap. Okay, so this is your first entry as a swing trader, right? Then you will aim, you already know, you are already aware that price is expanding lower, and you are targeting these old lows, right? You are targeting this old low. So in other words, getting in here, you will hold your positions depending on you. As a swing trader, you can hold for several weeks, like we mentioned earlier. Okay, you can. So certainly we got our entry after us when we got to the monthly bearish order block. That will be 1, 2, 3, 4, 5, 6, 7. Okay, that's obviously about a month and 3 weeks, if I'm not mistaken. It should be a month and 3 weeks before we got our entry. Okay, so now let's see how long we are holding. 1, 2, 3, 4, 5, 6. Okay, probably you can aim for this as a target, as take off some partials, right? You can take off some partials right there. Okay, so now our second entry will be this. So we had a minor consolidation again. So whenever price goes into consolidation, that is kind of reaccumulation. Okay, so that's reaccumulation, and we have expansion, then we have retracement. Then what is this? This is our order block, right? So we have price trading to our order block. This will be our second entry. Stop loss will go there, and we can aim for this old low. Remember, our overall trading range is price reaching for this old lows, right? So we have our entry there, and you can see price expanded right into our TP. Okay, so now that is how you would have applied this as a swing trader. Okay, so now going down further to the daily time frame for our short-term traders. Okay, the short-term price action reference for the short-term price action swings in trading. Okay, so trading setups take a little time to form on this time frame, but when they unfold, they tend to unfold over 1 to 3 weeks. Due to the length of time, this chart requires to present a setup. Trading in the direction of most recent setup can yield low risk and high reward conditions. Okay, swings can also be about 50 to 300 of pips over a short term time period. Okay, so now how would you apply this? This is obviously our daily time frames for short term traders. Okay, so how are you going to trade this as a short term trader? Okay, so obviously let's say you pulled up your chart and you saw this price have just traded into a monthly bearish order block. Okay, so you are expecting smart money to sell off from there. So how are you going to trade this? Okay, so obviously as a short-term trader, you are using the daily time frame as your highest time frame. Okay, so this will be your shift in structure, right? So this will be your shift in structure, as you can see. So this will be your shift in structure. Okay, and as you can see, price just expanded in one direction without much retracement. right? So price just expanded in one direction without much retracement. We have this, we had this, then until we got here. Okay, so price began to retrace a bit, and what is this? We have this fair value gap, right? So we price trades into these fair value gaps and dropped off, break structure to the downside. Then we had this again, we had another fair value gap right here. Okay, so we had this fair value gap, and probably we had this breaker block. Okay, because this is the last dark candle before this up move. No, this is a mitigation block actually, because there was no, okay, there was actually a high taken out right here. Okay, so this should be our breaker block. So this will be a mitigation block, okay, because this is the last down candle before this whole move. Okay, so this will be a mitigation block, and actually price trades into it right there, and at the same time trades into a fair value gap. Okay, so that will be our second entry for as a short-term trader. And remember, our range is to aim for this old lows, right? So we are focusing our aims to aim for this old low, right? So we have price break structure to the downside, trades into this fair value gap, okay, creating liquidity void, trading back into the fair value gap, consolidated a bit, okay, then broke structure to the downside, came back, traded into this order block. Okay, so this is the last order block, last up candle before this whole down move, right? So price trades back into it, broke structure to the downside again, consolidated a bit, came back, traded into this last up close candle, right? Then dropped off, okay, came back into this fair value gap and broke structure again, traded into our targets, came back, okay, traded into another order block and dropped off again. Okay, so I wanted to take a look at the number of opportunities we had. We had 1, 2, 3, 4, 5, 6, 7 trading setups. Okay, so you might not actually be able to have cashed each and every one of these. Okay, let's be sincere. Maybe two setups, and if you would be able to hold on long enough, and just a single setup, and if you are be able to hold off long enough, you would have actually captured some huge moves from this. Okay, so now is just that for this teaching. Okay, so the takeaway of this video is that what I want you to take away from this is that I want you to try and go to your monthly time frame. I want you to backtest this. Okay, backtest this on any asset class. Okay, it can be this is actually the Euro USD. Okay, it can be Australia dollar, it can be the GBP USD. Try to look for just a single time frame, a single setup, okay, from the daily time frame. From the monthly time frame. Okay, look for a single setup from the monthly time frame, and just like I have done the process of how how I did this. Okay, look for a single setup and watch how enormous how huge the move. Okay, watch how huge the move are. You know, watch how explosive the moves are. Okay, just watch how the movements are, how it would have benefited. Just try and backtest this. Okay, so this is how important the monthly time frame. Okay, so monthly time frame is very very important, guys. It's very very important, and if you can just frame a single setup from it as a trader, trust me, it's going to play out, and it's going to be the movement is going to be huge. Okay, so that is that for today's teachings, and I hope you have found this insightful. If you have any question or you have a request, please use the comments box, and remember our telegram group link is always attached to the description box. Okay, so you can feel free to join our telegram group. And please, if this is your first time of coming across this channel, please do well to subscribe to this channel, share with friends who are interested in learning smart money concepts. And we are just getting started on the smart money trading model. Okay, we are just getting started, and I'm going to see you guys in the next episode. Okay, so see you guys in the next episode. Have a good trading